and may not be suitable for all investors. Before deciding to trade foreign exchange, you should carefully consider your investment objectives, your level of experience, and risk appetite. The possibility exists that you could sustain a loss of some or all of your initial investment, and therefore you should not invest any money that you cannot afford to lose. Be aware of all the risks associated with foreign exchange trading and seek the advice of an independent financial advisor if you have any doubts. So, welcome to the best live trading room in the Forex, bar none. All you got to do is ask our traders. So a couple things you need to know. Forex Target Trading LLC is the educational part of our business model. It's the methodology that we use. ProAct Traders LLC is the technology part of our business. It's the software that we use. So we combine the methodology with the ProAct charting software to create our results. And our results are taken from actual traders using the combination above and then averaged for our pip capture. Now, since many traders take only 2 or 3 of them and other people may take 2 or 3, it's virtually impossible for you to match our record unless you took every single trade and you never slept and you traded every single market, all 3 markets. So don't think that you can match the record. It's just a running total. So in other words, this is our trader's record, not my record. My record doesn't count. Your record is what counts. Things to know. We are trading setups, not trades. Any decision to take a trade is yours. We are training what an RF1010 or a 6 aces trade setup looks like in a live trading environment, not after the fact. So I may say this is a valid RF1010 setup. Enter when ready. That is a trade setup, but it's not yet a trade. You, emphasis is on you still have to look for T30s, any previous support or resistance, any fib barriers that are in the way today. You must assess the risk and reward. You must know the target and you must know the stop loss. If you don't know the target and you don't know the stop loss, you are not a trader. You are a gambler. Wait for a hook or a center, and if everything is right, then you make the decision to take the trade, not me. So stops are always going to be the technical stop. We may say the stop's around 110.12. You must use the technical stop, which is the last support or resistance, depending on your direction, plus 5 to 7 pips on a number that ends in a 3 or a 7. So in this case, it must be 110.13 or 110.17. We also never use a 5 because 5 is used often in option contracts. Stop should be moved to break even after 17 to 21 pips, depending on the real estate of the day. So in other words, it's not automatic. At 17 to 21 pips, you look and see if you might be able to move your stop. Anything spoken of in the room is an opinion, not a trade call. Everybody in the world is entitled to their opinion, including me, but my opinion is not a trade call. This is not a trade room. It's a training room. But we do make documented pips in here, and we are here to teach you to fish, not give you a fish. We're training how to use our methodology combined with the ProAct charting software to its full advantage as a service to our live room subscribers. So, I want to welcome our demo traders here. Anybody here on a one-day pass, we're glad you're here. Hopefully you see some things you like. I think you're going to find out pretty quickly that we are a big Forex family, and everybody here is helping everybody to get better. Okay. We are Forex target traders. That means many trading opportunities we identify are not entered during the New York session, but they may fulfill in subsequent sessions. That does not change the trading opportunity. So we will also do a heads up after the session that is recorded. We do that every day except Friday because there is no session after Friday in New York. If you're a demo trader, you must pay special attention during that recording. Live room subscribers have the ability to review that recording, but you do not. Live room subscribers also get chart alerts if we see anything later, but this just means go look at the charts, since these will not be trade setups, just things to watch for. They look like this, and they do have stops and limits, but these are sent out anywhere from 3 to 12 hours ahead of the market. So it's just a starting point for you in the wide open space and to see if the real estate still holds up and whether these numbers are still good. Now, any alerts either talked about verbally or sent to live room subscribers are for educational purposes only. This is not a trade signal calling system of business. Please use your real name. We don't like to use fake names or my big fat FX. It doesn't work for us. No swearing in the room. No sound. You just log out and log back in. It's an internet issue on your end, not on our end. There are no dumb questions in here. And all ProAct Live sessions are recorded. So anytime we're live, it's being recorded. Now, it's not about trading every day. It's about trading that one right day. You make money by waiting, not by trading. Sounds so silly. Nobody wants to believe it, but it's true. The one trade you're going to learn in here is the wait trade. We wait for our trade to come to us. So I'm going to look at the RF1010 trade setup now, so pay attention. This is a trade setup we look for every session. It's the first momentum move of the session. Could go 25 to 30 pips on initial thrust, and it could end up going 80 or 90 by the time it's all over. Alright, so we're looking to make a buy here, and it's found in the RF1010. It's called the RF1010 because it's found in the Royal Flush template. That's the RF part, and we use the two 10-minute charts. That means that the 60-minute gatekeeper here is not part of this setup. So we're looking for a buy on the euro. How do we get into that? First thing that has to happen is our gatekeeper has to set up. Alright, so what are we looking for? First thing is a blackjack. That's that black candle down there. Nothing magical about it. Hits the moving average. We turn it black so we can find it. But we ask that candle to tell us what direction is the money coming in. It puts a green diamond on the bottom, so it says the money's coming in a buy. We're interested because we're looking for a buy. Next thing we need is the moving average to be green because we're looking for a buy. Next thing we need is candles above that moving average because we're looking for a buy. And finally, we need the momentum indicator called the HMI. We need it to turn from red or black to green because we're looking for a buy. All right, as you can see, that didn't happen. So we have to wait a couple of candles. We wait a couple of candles. Everything gets in harmony here. Now we can go up to the trigger. What do we need up here? Up here we need a bright neon painted green arrow and painted candle. Alright, just be the opposite going down. Alright, so there it is. That tells us momentum is entering to the upside. But the RF1010 is a trade setup out of the desert. What is the desert? The desert is the highest moving average and the lowest moving average. If we're inside the desert, we do not have this trade setup. So we wait for the candle to pop out of the desert. It does so on that long candle there. That's called the trigger candle. And we will take the very next candle on one condition, that we have total harmony down in the gatekeeper still. Alright, a little bit more about the trigger candle. Before we enter, we let it center. What does that mean? Alright, before we enter any trades, we let it center on itself. So the trigger candle goes off and takes off and goes up 20 pips. What do? Nothing. We wait for it to come back on itself halfway, or center on itself, which in this case would be 10 pips. We will then take the trade from there on one condition, that we have room to the targets. Now it's very important. We never make an entry unless we know the exit. Alright? Now that's also important because we could get additional triggers. If we get an additional trigger, can we take this trade? The answer is yes. We got plenty of room to the next target. Then we get another one up here. Can we take this one? And the answer to that is no, we can't. We're too close to the target. So you're a newbie though. You say, yeah, but man, you could get 5 or 8 pips up there. Why don't you go grab them? You'd be right. You could get 5 or 8 pips up there. And that's exactly what the average retail trader does. They trade for 5 to 8 pips, and so they then must be right 90% of the time for the rest of their life. It's not possible for you to be 90% correct for the rest of your life unless you are the greatest trader on the planet. Now, if you are the greatest trader on the planet, don't stop doing what you're doing, and you don't need to be in this room. But if you're not the greatest trader on the planet, you have got to stop trading for 5 to 8 pips and learn to trade to targets. So you decided to take that trade and get 5 to 8 pips, and guess what? The big boys can't make that trade, so they go away from the target so they can go at it again. You get stopped out, and what do you say? Ah, the daggone broker stopped me out again. No, the broker did not stop you out again. You took a trade you never should have taken because you took it right into a target that you didn't know was there. Alright, so now I'm going to show you an illustration of a sell, okay? Remember, the 60-minute is not part of this trade setup, so I'm looking for a sell. So now I need a blackjack the other way. There it is, to the downside. I need the moving average down. There it is, to the downside. I need candles below the moving average. There they are, down there. Alright, and I also need the momentum indicator telling I have enough gas in the tank to drive this to the target. Check, I got everything I need down here. I go up here looking for an arrow and a painted candle, and not only do I have an arrow and a painted candle, I also have a white dot. The white dot says we are potentially going 55 pips. All right. So I have a potential trade set up here. The question is, do I have a trade? And the answer is, no, I don't. And the reason I don't is because I'm right above the 93.00 number. We never trade into a 00 number or a 0.50 number because option contracts are sitting on those numbers. If there's an option contract on it and it executes it, then the trade will go the opposite way. So we need to be able to move our stop to break even if we're going to trade into an even number or a 0.50. That's number one. Number two, we're still inside the desert here. So you see, folks, a trade setup is not a trade. And retail traders get this wrong all the time. Right? So, if you're new to our room, I'm going to quickly go through the 19 currencies, and then we're going to come back on those that show promise. Please hold your questions until then, and we will answer them. But today,
so there we go. All right, so no fundies today to mess up the whole thing. We're looking for possibilities this morning for our traders. Our website is down. So for our traders who are over here visiting, they're working on it. So we'll see what happens. All right, let's take a look over here. We'll start with the euro and see what we got for opportunities. All right, and we're going to leave the chat closed until after we get totally done here, because this group has a tendency to ask a lot of irrelevant questions, or questions that may be relevant but not relevant at the time. So we need to be focused on getting through these currencies so we don't miss trades. Yesterday we missed 200 pips because we were answering questions. All right, so we're not going to do that today. All right, as you see, the euro has gone nowhere. Everybody says, why do you call this a dog? Well, that's what it's done in the last 48 hours right there. Nothing. Zip, nothing. It's got a 90 pip move to the downside here, and it's not doing any of it. Okay? So it's we're poised to go from 35.18 to the next target, which is 35.29. As you see, that's 90 pips right there. Since it opened on Sunday night, it's dumb. It's yuck. Right? So just walk away from it. Right, as usual. Yeah, but I always trade the euro, man. Well, if you're trading the euro now, you probably lost 4 or 5 times already trying to trade it. It's not going anywhere. All right, British pound. This is a trade that we did try to get yesterday. Missed that opportunity also because it didn't give us a high enough move off of here, and the risk and reward was too bad for us to make the trade. Just to review that would have been the risk yesterday. That was the reward. So we couldn't make the trade. Even though we knew it was going down to here, couldn't make the trade because of the risk and reward. So let's take a look at the risk and reward for today. What do we got? Zip, nothing. Nothing. Right? We're at the bottom of a trend line. There's nothing for us to do here. Right? Now, if they do continue to poke out here, what will that mean? That means that more than likely that the trend is bigger, which means we'll have to move this from here over to here. Right? But right, potential head and shoulders here for a bounce. So we don't want to move this yet. Now, if you don't understand that, we talked about these last night in our advanced class about trends. All right, so you can go review that lesson. All right, so right now there's nothing to do unless it proves that it's not a head and shoulders and pushes on through. Now, if it does push on through, it's got these 2 PSRs to deal with, so there's no trade till we get down in here. That's 50 pips away. What does the British pound give us today? Nothing. Right, because the ATR on that is 106 pips, and it's already moved 30, 60. Right, so there's nothing for us on the British pound right now. Dollar CAD, it is not going anywhere. It's directionless. Nothing to do with it until it gets a pullback. It has no pullback yet. Therefore, we can't touch it. Get away from it. All right, Swissy, we were looking yesterday for a breakout of this and maybe a push to the downside. What we've got so far is a breakout and nowhere. All right, so it's broken and hooked. Maybe we'll get a go here. So how do we figure that out? Well, in our charts is very simple. We go and look at the we call these the 3 musketeers down here, and the 3 musketeers say we're not going down at all. We're going to go up. All right. So because of that, we're right here at the top of the trend line. That means that we'll more than likely get a attempt at breaking out of this trend to the upside. All right. Now, if that's the case, we'll wait for that to happen, and then we will trade it. So there's nothing to do on a Swissie yet. All right. Over the dollar yen. All right, dollar yen had some announcements during the night that created some excitement here. We've taken out the bottom of the trend. As you can see, it's a very shallow trend right now, and we have a 240 trend now inside this day chart trend. So we're going to draw that and see what that looks like. Oh, that looks pretty good. Okay, so there's a 240 trend inside the day chart trend. All right, so we're looking to come back up. We have, yesterday we talked about this. If we can get up into this area, right up in here, you see our little arrows here. We want to trade down to here and then double our position here. So we've come back up here. That's where we've come. All right, now if we get a sell, that'll be great. But that means that they'll have to buy dollars this morning. So let's go look at dollar, at the U.S. dollar index. What is the U.S. dollar index doing? Nothing. It's going flat. Right? We need to, if the dollar yen is going to go to the dollars like this, all right? Right now they're currently in an uptrend, all right? And the preferred move for the dollar index would be to the upside, all right? Well, that'll cause a huge problem for the dollar yen, all right? You can see that because we need it to go down in a downtrend, and the dollar is being bought, all right? So the dollar index, yen doesn't offer much of anything this morning. We'll kind of keep an eye on it in case it turns to the downside. But if it turns to the downside, we have more yen crosses that would be better trades. All right. So over to the Aussie. Aussie reversed last night on the RBA announcement that they are going to taper off. They're evidently watching Mr. Bernanke and seeing how he runs. Well, we took it up here. We were looking for the breakout to the downside here. As you can see, it never came. The announcement came out, and there's the reaction to the announcement. So we've now had an absolute trend change on the break here. We're looking for it to pull down or go sideways and continue to the upside up in here. I'm going to put the HSI on here, and we will be interested in the Aussie to the upside. Right? We were looking for it yesterday, the downside. All right. So all of you who did not pay attention that there was an RBA announcement last night may have gotten stuck in this. Well, now that's a big lesson for you that it's the trader's job to know when the announcements are going to occur. All right. So we're now down out of this. This was a wedge, and now we're out of that, and we're up here trying to get to the top. All right. So right now we're above the R4, and we're going sideways here. This is the old, doesn't do anything for us there, so we'll take that off. So, you know, there is an opportunity up here to the S3. Now, the problem with this is that this totally exceeds its ATR. Right? The ATR is 103 pips, and it went down 60 pips, up 60 pips. That's 120, 150, 180, 210, 240 pips. So it's moved 240 pips since yesterday. Its ATR is 103, which means it's probably dead in the water right now. All right, so we'll walk away from it. We will take the buy if it happens. We'll keep an eye on the Aussie to the upside, but it has exceeded its ATR, so it is doubtful that it will happen, but it could. All right, the EJ from yesterday. EJ is in for us. It was an alert from last night. Let me pull that up, and so you can see it. All right, so there's the EJ alert. It's an IC alert that we send out to our traders every day. It was a sell at 136.30. 136.30 is right in here. All right, so that's where it took off, and the target was 135.76. You can see why. There's the target right. Break, hook, and go. There's the break and a hook and no go. All right, you see that? It never goes. So after the break, hook, and go, all right, and nothing happened. We didn't get a go. So therefore, we don't have a trade here. All right, we're waiting for this to continue. We're looking to see this is now a bear flag. The same trade will happen again. If it breaks to the downside, we will take this trade. All right. So let me put that on for you. We're looking for this break of this line right in here. Let's pop it up here so we get a little start of it. All right, so breaking down in this area, that's a trade to the downside. You can see 136.84 to 135.75 is over 100 pips to the downside. And EJ has done nothing. It's got 134 pip ATR. It has not done 134 pips since yesterday. Therefore, this is a very viable opportunity today. All right. Will we get it? I don't know. We'll see. All right, over to the pound yen. All right. And the pound yen was a trade we missed yesterday, just like the EJ. We missed this for 100 pips yesterday, and that was because we were answering questions. So we made the decision that normally we answer all our questions, okay? But this crowd is too big to do it. There's just too many of them, so we'll have to wait until we get to the lull, and then we will do it. All right, so we missed this trade right in here. 100 pips right there yesterday. We can't count it because we didn't take it. We were there. We didn't take it. We're answering questions. All right, we've taken out the bottom of the trend wall. We've done a bounce. All right, here we could have another. We should actually have another move to the downside, and then we have to decide whether this is going to be a head and shoulders for a bounce, or if it negates the head and shoulders, we have no trade to the downside. So we can trade this to the head and shoulders because it's 1, 2, 3, 90 pips downtrend. So if we get that trade, we will take the GJ to the downside. All right. Over to the New Zealand. All right. New Zealand typically follows the Aussie, and as you can see, it is not as dramatic because it wasn't an Aussie announcement, but the New Zealand does follow it. All right, so we've now come up to the top, which is where we said we want to be. If we get up to the top, all right, right up here at the heart line, we talked about this last night. What was the percentage? All right, that's what it is. What did we just do? Up to the heart line. Now, if we get a sell, we're going to look for a double bottom. All right, so if we get that sell in the New Zealand, we will. But since it follows the Aussie dollar has changed direction, it is doubtful that that will happen. We would only take the sell if it happens, and because it's doubtful that it will happen, we're going to put it on the shelf and watch it, but we're not going to trade it. All right? We will not be a buyer until we do either one of two things. We either get up here and out of here, all right, or we come up, pop down here, and start this move up like this, which would give us the start of the C wave to the upside, which would take all this out. So there's no buy at all until we do either A, break out of here, or B, up to the top, back down, and then a bounce to the top. All right? So there's no trade here immediately. The only other trade we'd have would be a C directly to the downside, and that's what we're looking for today. All right? So there we go. All right. That takes care of that. All right, for those of you who trade silver over across the pond, we're waiting for the breakout to the downside, and as you can see, they're all going sideways. Nobody's committed to this trade at all, and so it's just sitting here doing nothing, and while it does nothing, we will do nothing. All right? So a break to the downside, first target is down here at 1889, and the overall is 1824. Its ATR is down to only 44 pips, folks. So it used to be a big, big winner for us, but again, it's got Aussie in it, so it reacted with the announcement last night. There it is, and there's the reaction to the outside. Okay, now we were in up here. Aussie yen was in up here, and we'll find out how many people made money here on this trade to the downside, because it was a pretty nice little trade. And I'll bring up the alert on it, and there it is right there. Oh, that's pound Aussie. Hold on just a minute. There it is. Aussie yen sell was at sell. It was a live yesterday. It was a live trade right after the room, 89 and right below 89 right here. The target one was 88.15. Right, and you can see it didn't quite get there. Right, so you would have moved your stop on the trade from the New York session and hold for the target. 88.15. It started to make a move. It got as low as 88.25 within 10 pips of it, and then the announcement came out. Everybody should have gotten flat during the announcement. So we'll see how many people did make money on this thing. It should have gone, but it didn't because of the announcement. Nothing to do about that, folks. Sorry. All right. All right. Well, back to that. Aussie yen. All right. We now have a breakout. All right. As you can see, of this little channel here. All right. But we're still inside the big trend. All right. Let's take us up to a 240, and you can see where we are. All right. So this breakout here tells us we're going to try to make a move up to here. Now remember, the Aussie has reversed. So therefore, the preferred direction is here. This is an unsustainable trend, folks. So we can't trade this thing until we get a break, a pull down, and a bounce, which gives us a trend like that. Once it's 45 degrees, then we can trade it. All right. So thank you, Pip. We'll get there in just a second here. My fault. I jumped ahead and came back. So until we get a pullback, nothing to do on the Aussie yen. All right? All right. Most important for new traders to understand, you don't go in the market looking for a trade. You go in the market looking for the structure. Once you figure out the structure, the trade will become evident, and there aren't as many trades as you think. Yes, there are thousands of 5 to 8 pip trades, but there are only 1 or 2 real opportunities to trade the targets per session. Your job is to find that one. Put your money at risk only once or twice and make 50, 80, 200 pips on the trade as opposed to 5, 10 trades for 5 to 8 pips and having to be 90% correct for the rest of your life. All right. All right, so here's the EJ. As you can see, I've got it scrunched down pretty good. So let me put it up here, and we're at the top here. The question is, will this be a hidden shoulders to the downside. We're waiting to see if that's a head and shoulders to the downside and a sell-off, okay? If we get the sell-off, there was a trade number 1 and trade number 2. We talked about this yesterday. If we get up here and get a sell-off, that'll be fine. Well, it took them all day to get up here, all right? So it pays $1.63, which is 63% more money on the EJ than the EU, all right? So this is why we trade the EG, because we like 63%. If we get 50 pips, with 63% more money. That's the beauty of this currency, all right? So if we get that, we will definitely be interested in it. So let's put a single line trend line on here. We got to be below here before we can trade it. As long as we're up here, we're still in danger for a breakout to the north. Okay. All right, Euro Aussie. Euro Aussie was a trade from yesterday. It was a session recap. We'll come back and look at the Euro Aussie a little later in terms of session recap. But our goal was to come back to the top, right up in here, and sell it off for another move to the downside. And as you can see, it went right to that target, right to this target, and it stopped dead on this target. This is why we're target traders, folks, because we can tell where they're going to go with a high degree of probability, all right? We can maximize that opportunity because we know it. Thank you, Pip. We're at the 10 o'clock bump, which means the option contracts that were up there in the notes, especially those big ones on the dollar-yen, have all expired. All of those have expired up there on the dollar-yen. So that's good news for us, all right? Now you'll see the market. See how immediately you get the reaction, right? Now we can move. See, it's now pushed on down through. Let's see what the dollar-yen did just for grins and see if it's going to do anything. We need it to turn. We'll see if it turns. Nothing. Okay. All right. All right, back over here to, that's the Euro Aussie. What are we going to do now? Okay, well, we've got to look at this thing pretty tight here. It's no longer, we were anticipating a falling wedge yesterday. It's no longer a falling wedge. What is it now? It's an even lower trend. That means that it's got to come down into here for the trend, which means we're just barely at the heart line right now of the first move. All right, we look at the structure and say, what does the structure say? It's a 5. All right, so we're at the bottom here. It's a fifth wave. We need an A, B, C to the top, and then another wave to the downside. All right. However, they may elongate this. If they elongate this, then we have this trade right in here. All right. Now it's done. It's ATR for the day. It's 199 pips. All right. Which is 6 T30s plus. Here's where we were yesterday. Okay, we went 1, 2, 3, 4, 5, 6. That's the ATR. 7, 8, 9. So it's gone 60 pips further than its ATR. All right. So we may get a push down here. All right. But the chances of that happening based on structure are slim. They will probably go sideways or start an ABC back at the top. So we'll keep an eye on it. But it's doubtful that the EA will happen at this point in time. All right, CAD yen. All right, CAD yen, you know, it's got a CAD in and CAD's doing nothing. And you can see the CAD's doing nothing here. We've broken out of this channel here. We're looking to see what it's going to do. We're in a downtrend. We're a seller. All right, our area to sell is right here. It's pretty easy to see. That's the wide open space. Now, if you're brand new in here, you're going, why are they looking for wide open spaces, okay? Right. Areas where we have nothing to stop this thing, where we have nothing to stop this thing, where we have nothing to stop this thing, where we have nothing to stop this thing. These are the areas the big boys are going to run the currency to the next target. That's the trade we're going to make. We're not going to get caught in this mess in here where all the dumb money's trying to trade, and we're not going to get caught in this stuff right here. We're going to wait for it to take off and take that trade. All right? Right in here. There's a whole bunch of junk right here. We're not going to mess with that. We're going to take that trade. All right? If it doesn't get here in a session, it doesn't get here in a session. I can't make it move, but it moves. It will move. All right? So that's the nature of currencies. They continuously move. All right? All right, so if we get the opportunity, this is our trade to the downside right there. All right, so it's got a long way to go before it gets there, so most likely the CAD yen is off the chart for us today. All right, here is the pound chief, and we took out this bottom yesterday, as you can see, and this is This is 9 o'clock yesterday morning right here. This was the trade. It all went in one candle, though we couldn't get it. Right, but it did take the target out. Do you see? This is why we're target traders. This was our target yesterday. It went in one candle. We don't have an opportunity to trade it. Okay, when that happens, right? So we can't get into it. You know, just because we know where it is doesn't mean we can get in the trade. Right? So let me get this thing. Here we go. I need to dash it. So if the target has been taken out, right there, right? So the next target is all the way down here. Right? So obviously we got a breakout here. I'm going to have to rechange the trend. If it moves to the downside again, we'll redo the trend to the downside. Right now it's not there. It's up close to where it could bounce right back in and this be a false breakout. So I don't want to try to figure out what it is. I want it to prove what it is. If it breaks back up in here, then I'll leave this trend on. If it doesn't and it moves, but I got to have it prove that to me. All right? So I'm waiting to see. Right? We can trade it to the downside because even though it might be a head and shoulders down here, the right shoulder is here, which is 50, 60 pips away. So we can trade that 50, 60 pips down here as long as we're aware of the fact that the left shoulder is here and the right shoulder could be here. A break of the right shoulder means it's not a head and shoulders and we're coming down to here. All right? So we love that. Phenomenally good trade for us yesterday. All right, so let me pull that up. Pound Aussie is number 2. All right, there it is. Let me do this again so you can see it. And we'll find out how many made that trade in just a minute here as soon as I get through them. But it was a pound, it was a sell at 86.20. 86.20 is right up in here. There's 86.20 right there, white dot, whatever. Limit was 85.22. After the pullback, there's the pullback. Okay, all right. ATR is 200 plus pips. Add below 85.50. Okay, that would be 85.50. It'd be right in here somewhere. Below 85.50, add. Also below 8,500, add. All right, and get there for 8,400. All right, so that was our target there. We'll see how many people made that trade right there, folks. It was a sit and duck last night. 240 pips is what an average does on a day. Those are the currencies we want to trade. Currencies that we can figure out that have ATRs of 240 pips, other than currencies like the stupid euro dollar, which has a 75 pip ATR and doesn't go anywhere. And all the dumb money's trading it and the black boxes are in it. All right? You want to make money, trade currencies that move. All right? So there it is. We'll come back and see. Now, what are we going to do now? We can't do anything. We've exceeded the ATR. We're just going sideways here at the bottom of a trend. All right? So let's pop this up and you can see that. All right? Now, that is an unsustainable trend. So because it's unsustainable, it has to do a pullback. All right? We will expect an ABC pullback to the square up. The square up is right back up here, and then they can go again to the downside. All right? So there's nothing to do on the GA. That was the trade. All right? For those of you who were here last night, you know we saw this all last night. We looked at these. Here's the heart line proven, as always, with the trend anchored on a resistance, anchored on a support, and that's what tells them to stop here is them anchoring here. It says you're done here. And so if you know that part right there, you then know this part, as long as you can find the heart line. And that's why you do that, so you can identify that trade and don't miss that trade. All right. So great trade. We'll pop a ton of pips there, folks. That's all there is to it. Euro New Zealand, okay? This was, wait a minute, let's see. What was the blog this morning? Hold on a minute. I think this was the blog this morning. I'm pretty sure it was. I can't check that. Hold on just a minute. Give me 1 second. Oh, it's the pound New Zealand. Okay, that was the blog post this morning. All right, so this is the breakout to the downside, as you can see. That's why we do them both ways, so we have targets both ways. All right, we were anticipating a bounce here, never got the bounce, where we get a breakout for about 60 pips, right down to the target again. All right, so this is an unsustainable trend. All right, it's greater than 45 degrees, which means they got to pull it up into here, and then. All right. Right now, we don't have that. All right. Now, there is a possibility, obviously, that they could pull this thing down into here. All right. We're going to take these up targets off now. All the other targets are going to come off, all right, because we now have a breakout to the downside. All right. We're going to put them on to the downside. All right, so we just took out the S4. Next target is down here. Where you can see we have a big double bottom right here. So that's the next opportunity right there to the downside. And we will take that if it occurs. All right, Euro New Zealand to the downside. All right, it's got 179 pip ATR, so it can make that move. All right, it's very important to know the ATR because then you know if your target's realistic for today. This is the pound New Zealand, which was the breakout we were looking for. It's underway right now, as you can see, and we're looking for this target right down here of 99 side there. Let's take it down to a 10-minute chart and see what we're looking at right now. All right, so now we got the break and the hook and the go. We've taken this target out. We're taking this target out. We got a break, a hook. We're waiting for the go. Two-part trade. First part is here. Second part is here. What we call a snowman. We're always looking for snowman because it means we have two areas, which means we can press our winners without exception. Okay. Trade 1 is in the top spot. Trade 2 is when we break and hook down below here for the target to the downside. So we're looking for a sell imminent on pound New Zealand to the downside. Very close to happening, as you can see, because we've had a break and a hook. We're waiting for the go. All right. So the G bar, so it can rock and roll all of that and then some. All right. We'll keep coming back. 2 more to go and we're done, folks. So let me get through these here. Okay. All right. Here is the New Zealand yen up to the upside, and as you can see, it's cranking up. Why is it doing that? Because of the Aussie announcement yesterday. New Zealand follows the Aussie, and that's why it continued to the upside here. All right, so let's take a look and see what it looks like on a 240. All right, on the 240, it is a correction. All right, so if it comes up here and turns to the downside, all right, which you could, if it comes up here and turns right here to the downside, there's a trade right there for us to the downside. All right, if it doesn't do that and continues up, we have no trade up in here. We will be a buyer once we take this trend out, but we won't be a buyer until then. So we're looking for a possible sell on the New Zealand yen. All right. Finally, the Aussie Swissy, again, it's got the Aussie in it, so you see the reaction to the news. Aussie reacts to the upside. Okay, we were waiting for the sell. Some of you may have taken this, was a session recap yesterday, to take this one right here. Okay, if we break here, take this one right here. All right, now we were looking for this sell. We got trade 1. All right, so we'll find out if anybody got the Aussie Swiss in just a minute. But we got trade 1, and then the announcement came out. Everybody is supposed to get flat before announcement, so nobody should have got caught in this trade at all. If you got caught in this trade, you did not follow the rules. That's why you lost, not because of anything else. The rule is you get flat before a fundamental announcement on any currency that's going to be affected by that announcement. Aussie was the announcement. You got to get flat on Aussies. If you weren't, then it's your own fault. All right. So we'll see what happens here. We already have the makings of a trend to the upside anyway because we were working this channel, all right, as you can see. All right. So now that we're out of here, we can change this to a real channel, a real trade to the trend to the upside. And we got to anchor this. All right. So we're going up here. We haven't proven the heart line yet, so this is an iffy trend, but it can't be this much because there's 2 parts to a trend. Always, this is the lower part of the trend. The upper part is up here. All right, so we're going to have to use this even though it hasn't proven the heart line yet. All right, so now we can see that even if we get a trade up to the heart line, we're going to see a pullback here. So we're not going to take this trade up into here. We're going to wait for the pullback and then a bounce. That's what you're going to wait for. Pullback and a bounce. All right. So let me get the session recaps now. Open it up if you will. Yes, we're not taking any questions. Just remember that, okay? So over here on the Aussie Swissy, how many people got the sell? How many of our traders got the sell? Aussie Swissy to the downside, part 1 of yesterday's trade. All right. Anybody? Nobody. Okay, there you go. 30 and break even. All right, David, 49. Nice job, David. Anybody else? Gavardhana, yeah, how many pips? That doesn't mean anything. Yes doesn't mean any pips. Alex, 35. Linda got a break even. Okay, not bad. Okay, Charles, another minus 20. Charles, you've got to be entering at the wrong place, bud. You can't. If everybody's getting 40, 45, 35, and you're getting minus 20, it tells me you're entering at the wrong place. So you need to work on that. So let's try to do that. All right. Steve, 50. Amanda, 42. And okay, thank you, David. Okay. Johan, the recording is on your end, not on our end. Everybody sound okay? Everybody ever fine? For Johan? Okay, 55, pound Aussie, 152. Wow, Ali. Okay, 55, Ben. Okay, that's nice, 37 pips. Okay, let's take Nicholas's 37 pips. That looks like a good number in the middle there. Okay. So there you go. All right. So if you have sound problems, log out and log back in. It's where you are on the internet. It's not us. All right? It is not us. So everybody gets mad at me because their sound sucks, as you just saw. And it's your computer who does that. Your internet that does that. So it's an ATR, Bob. All right. Picture, okay, that's the Aussie Swissy. Let's look at the pound New Zealand. All right. Pound New Zealand. All right, pound New Zealand, we had a trade to the downside yesterday. How many took the pound New Zealand yesterday? Anybody? Nobody? 80 pips, okay, Rick. Anybody else? Anybody else? 65 for Rick. Easy, 209. Wow, Amanda, 68. The Vardana, 18, okay. 91, Nicholas, all right. All right. And anybody else? All right, let's take the 66 pips. All right, you notice we don't take the high, we don't take the low. This is your record. It's not my record. Okay. All right, over to the pound, the Euro Aussie. All right, Euro Aussie was a great trade from yesterday for the bounce to the upside and the pullback to the down. Euro Aussie, you're still in. Okay, at 5,400. So you're up almost 250 pips there. Bob, nice job. 195, Jeff, nice job. 260, Anthony, still in. So, okay, anybody else? 237, Amanda, nice job. Bill, 75 for the low end, okay. Bill, you must have entered late or you clicked out early. See that? See the difference? If it's where you enter or whether you clicked out early. See that? 92 and 42, Benny, nice way to enter. Pressure winners. Good work, Nicholas. Rick, 232, still in. Okay, out early. Okay, as long as you know what it is, that's good, Bill. All right. So keep going. All right. Yeah, we trade the news. Well, we identified it ahead. All right, let's take Steve's 169. How about that? That's a low number, comparatively speaking. Good work. Pound Aussie, big trade for us. This was an IC alert. How many took this trade? This one should have been 2, 3, 4 positions apiece. All right. 207, Jeffrey. Okay, in an area this big, Jeffrey, you should have 2, 3, 4 positions on. All right, never trade one to the thing. You'll never make money trading one lot, one position. All right, Trish, 95, 94, 114. Way to go. Bill, 88. Hugo, 256, 357, Mike, 8 and 20. Robin, 96 and 90. Pound out 305 pips. Chuck, nice. 20 minus 27. Greed. Okay, Charles, you know what you're doing. Demetrius, 100 pips, okay. Yeah, it's news, and that's why we do it. We know we can trade the news, Ron. Just got to get flat before the news, and then take the trade after the news. Takes 3 to 5 minutes. That's it. 260, 78, 56, and 48. Way to go. 240 and a half. Nice job, Rick. 223, 163, 89, 364, Dan. 92, 63, and 33 for Rick. 202, 187, 171, 150. Wow, Andrew, you made almost 1,000 pips last night on that trade. That's the way. That ain't working. That's the way you do it. Okay, so we got to do that one for Andrew. All right, here you go, Andrew. Oh, wrong one.
That ain't working. That's the way you do it. Money for nothing and your chicks for free. Money for nothing. Chicks for free.
Money for nothing and the pips for free. Okay. All right. So hey, let's see, man. Let's take the 157 for Andrew. What do you think? 157. You can see there's a lot of people with 200, 250. So that's it. All right. Alexi, it changes every single day. It doesn't do any good to post the ATR in the document. All right, go get a ATR and put it on your MT4, and you'll have it every day. All right. It was in here. All you had to do is log into the room, Randy. All right. So, all All right, so that's the pound Aussie. All right, the EJ we're in, and we need to look at the the pound Aussie we've gotten. Okay, so there we go. That's a pretty good night for that. Well, you can see people made well over what we're going to count. We're going to count 169 on the EA, 157 on the pound dollar. That's 300 pips. 66 on the pound NENs. That's 366, and the Aussie Chief 337. So all we're looking at here is about 400 pips. And you can see that people made a whole lot more than 400 pips. Mario, we record it. You don't record it. All right. So good job, everybody. All right. So back to what we're interested today in. Okay. We'll take questions in a minute. Let's make sure we're ready to go. Aussie dollar is on the list for a bounce up to the upside. All right. So if you want to write these down, this is what we're looking at, because we're not going to trade 19 currencies. We've narrowed this down to 8 currencies, and out of that, if we get an opportunity, it's only going to be 1 or 2. All right. So, okay, Charles, well, you see, we got work to do, Charles, but that's okay, Charles. You see, by doing this, you can see, I'm still not quite getting it. I'm still got work to do, all right? Okay, thank you. All right. Jay, you'll have to work. You don't have it set up right. You don't have it in there correctly. All right. All right, we're done with pip catcher. Actually, we're done now. So we're looking at currencies we're going to trade. Aussie dollar today is on the board. EJ is on the board on a breakout to the downside. Okay. GJ is on the board for a breakout to the downside. All right. Right here, if we get it, you can see it's going the opposite way. All right. So that's that. No, it's not a trade. It's what we're looking to trade. We're looking to see if we get a trade. That's why I went through 19 currencies, Reju, so that we could identify the 6 or 8 currencies that might go this morning. Out of the 6 or 8 currencies, 1 or 2 might happen. Out of 6 to 8, 1 or 2 may happen. So you got to throttle what you're doing, can totally down, and you got to look and say, I am over trading. 98% of you in here are over trading. All right, that's all there is to it. You're over trading. So. I don't have that, Amanda, so I can't help you. I don't have it on there. Okay. I do have something I want to show you a little later here. Let me get through here. All right, New Zealand dollar. These are the majors. We're going to trade. We're going to trade. If we get a sell-off after this pullback, we will take this trade. Okay. Okay. So there's Amanda. All right, there you go. You guys can read that there. So Amanda, by the way, is a brand new trader with us. All right. So she's got a current profit 2,723 pips net. Okay. All right. So way to go. As you see, there's money to be made. 2,723 pips. How many of you in here have made 2,723 pips, and she's a brand new trader with us, been with us 3 months? All right. So there you go. All right. 3 weeks. All right. All right. Well, the point is here, here's what happens. It doesn't matter what I get. It matters what you get. You see, can you be a trader with the methodology that we use? And the answer is yes. All right. Yes. Pretty close to a total newbie. She practiced for 3 months on a demo first, Randy. All right. All right. Sebastian, we trade the 240 chart, and we enter on the 10. All right, so we'll see if we get that. Over to the exotics. We're interested in the EJ. Also on a sell. We're starting to see it might just do that. Everybody see this? All right, we're starting to see the red show up here. We're getting our setup here. All right, we got a red candle here. This is set up to turn to the downside. Red candle here. All right, so if we get a move to the downside, we'll be interested in this EJ. Okay. All right, so that's it. All right, that's the EJ Euro Aussie. We're interested on a continuation, but we remember that it's already had a big move, okay? And we're waiting to see if we break down through here, down to 64.50, okay? So those are all close, and of course the pound New Zealand is the closest one right now for us. All right, if we get that, we have a break and a hook. All right, right now we have a break and a hook. We've taken this target out, all right, to the downside. Let's dash that. All right, so it's done. That was the first target. There's the second target, all right, right there. We're going to dash that. So what does that mean? The next target is right here, 99,000, and the target below that is here. So there's our trade, 1 and 2. All right? You will enter when ready. If you're asking me to tell you, can I make a trade right now? It isn't going to happen, folks. I don't call trades in here. What I do is give you the parameters of the trade, show you where the trade exists, where the opportunity exists, and a decision to make your trade is 100% yours. All right? So that's it. So you got to wait for your trade. So if when this goes, if it goes, don't expect me to say, okay, trade the pound New Zealand now. I'm not going to tell you that. It is waiting for momentum to enter to the downside for our trade setup, which is an RF 1010. So what do we got to do? We got to turn this bright red. It's bright green right now. We got to have red candles below here. That hasn't happened yet. We got to have arrows and painted candles showing momentum to the downside up here. So we're waiting for those things to happen. All right. So that's it. All right. Now I want to show you something. Yeah, but you don't have any live record up there, so I'm going to show you a live record. All right. Michael Anthony is here. He gave me permission to show you his FX book live money chart. Okay, Michael Anthony's in the room right now, and he gave me permission. I blocked off his money. You don't need to know how much money he made, but what you need to see is he's got 26,000 pips starting November. There's his equity curve right there. Right? He has over here this year 110% gain this year. Right? Double his account plus. All right, that's a live account. I'll show you another one later, or actually probably tomorrow with one of our live account traders with over 7,000 pips on single moves. So there it is, folks. It doesn't matter what I get. This methodology makes money for traders who listen, pay attention, and learn, and quit being the dumb money. All right. So, yeah, and it was not. That's a good point, Pip. Let me pull that up again. See, he was not initially profitable. He dipped down first. There's the break-even point, and from then on, it's been steadily up the hill. So if you're anticipating that the minute I get in here in 3 weeks, I'm going to be doing that, that's probably not realistic. All right, there's too many nuances to trading. But it is there, it is possible, and you've already seen people, if you've been in the room, you've already seen tons of people making. Learn it by listening to what we do, paying attention, listening, and that's it. 99% of you are all sitting here going, but where do I enter? Where do I enter? That's the wrong question, folks. It's absolutely the wrong question. The question is, where is the entry based on the structure of the market? See? You don't look for their trade to come to you. Jeffrey, well, you'll get an opportunity to see that later this week. All right? So you cannot do what we do on MT4. It's not possible to do what we do on MT4 because we watch multiple time frames simultaneously, right? Different things, right? And you have to watch simultaneously multiple currencies because it's the plethora of information that tells you what you are, all right? See, so it's not one thing. It's what is the preponderance of evidence on this chart telling me, all right? In the 240 world, which is where we trade, we figured this out in the big world. They are sellers, folks. That's what they are. In the 240 world, they are sellers. When we go down to the 60 world, we see they are sellers, still neutral, all right? We look down here, and during London, they were sellers here on the 10-minute chart, and you see that move. It's only 90 pips, that's all, just 90 pips, all right? That's all. We see on our 30-minute chart, we're a seller, all right? What are we waiting for? We're waiting for the momentum to come in to drive this to trade 1 and trade 2, and it's just simply waiting for that, all right? So there we go. So we're waiting to see that happen. Somebody keep an eye on it. If you see it breaking with a bunch of red candles, which means momentum has entered the market, All right, you can see what momentum looks like. Momentum is not just a regular old red candle. Momentum may have a white dot setting it up for a big move. It has lots of pulses of money coming in. As you see them, pulses of money coming in. Do we have that here? This is what we're waiting for. If money doesn't come in here, it's going to go sideways, or if they don't have enough sellers, they're going to go up and do a bear flag. In which case, if you take the trade without momentum, what's going to happen? You're going to be upside down in a bear flag. So we wait for the real estate of the day to tell us what to do. There's Pip's got it. When the real estate arrives, we're ready to go. We plan the trade ahead of time. This is what we're going to do. We're going to trade it to here. A break hook can go here. We're going to trade it down to here. All right. Now, the one thing we need on here is a roadmap. So how do we get a roadmap to down to this target at the S6? So let me show it to you. We do this all the time. Did it like 14 times yesterday, and then we had like 25 people say, "Can you show me how to move my stops?" All right, you want to know how to move your stops? This is it. This is the only way to do it. All right, your initial stop, and we've already told you, is your last support or resistance plus 5 to 7 pips on odd. There are 7 is because there are option contracts on even numbers. All right, so we can see here's where our problem is. We got a big bottom here that's got to be broken. It was broken. That's why we're interested. There's the trend line. It was broken. There's the trade 1. There's trade 2. All right. So up here, we need a roadmap in this area. All right. So how do we do that? On a 60-minute chart, I mean, make these candles bigger. So you can see it. We take a on a Fibonacci sequence extension key from here down to that swing low, swing high. And there's our, that doesn't help us, you see. We're already taking that 2618. But they're telling us they're using that, right? So what I'm going to find here is this area is too small for me to use the 60. I'm going to have to go down to the 10-minute. And you've got to be adaptable, folks. If you're not adaptable, then you'll not make a trade. You'll not be successful, all right? I need Fibonacci extensions in this area. So I'm going to need a swing low, swing high in this area right in here. I want this one right here. Gives me the same thing. But it shows me that they're proving it. All right. See, they bounced on the 618. So this is what they're doing. All right. So we get the trade. We're going to trade it down to here. All right. Break hook and go down. We move our stop above the 618. As we approach this one right here, we move our stop here. Don't forget, we're doubling our position here. All right. We move our stop here as we approach this one here. We're not going to get close to it. Then when we get close to this one right here, now we move our stop right above the 1270 fib. And as we really get close, the risk and reward here is all about what's left. If there's 8 pips left to this line, your stop can be no greater than 8 pips. Why? Because you need a 1-to-1 ratio. If it's 10 pips to this line, your stop can be no greater than 10 pips. If it's 14 pips to this line, your stop can be no greater than 14 pips. It can be less, but it can't be any greater. All right, everybody see that? Understand that. That's how you do it. All right, so that's what we're looking for. Let's hope we get it. That's the most eminent trade we got right now. All right, so we're going to trade here, folks. We're going to try to find an opportunity. We're not going to miss like yesterday. We missed 200 pips yesterday because we were answering redundant questions. All right, so we're going to hold off today. This group is a little different, which is okay. There's nothing wrong with this. Don't forget, this is a training session, training room, so we're fine with that. Yeah, that would be a good idea, Pip. Let's go do that. Let me find one I'm interested in trading. One will be the Aussie dollar. Let's go redo the Aussie because we have a breakout. Okay, so we have a total breakout here, so we're going to redo everything off of here and start with a blank slate. All right, so this is what the charts look like when you first get them. There's nothing on them. They're just candlesticks. Your job is to put the information on there that allows you to trade. All right? So first stop is up to the. Okay, well, you know, since we just reversed, we're looking for a. This is the bottom. All right, there's just not much question about that. All right? But we're going to go back in the past and look and make sure. So I'm going to close this and I'm going to turn this to a pink because it's off my day chart. All right, we do this every day, folks. All right, going back over here. Seeing if there's anything here that makes sense over here. Well, see, that kind of makes sense. We got a bottom there. That's just, and we got a bottom here and a bottom there. Okay, see that? See, one of the reasons they slowed down here before that announcement was because of that, and of course the other one. All right, and that one right there. Right? That's why they slowed down here. That's why when the announcement came, they could use it as a springboard to bounce them up to the upside. Right? Now, where are we going to the upside? Okay, so that's on the daily chart. Remember, every one of these is a day, so I'm going to clone this line and simply drag it out to what makes sense. I'm looking left to right, 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 left to right. I'm looking for what makes sense to me. And let me look at that. That looks good. Okay, why? All right, because of this top, these tops, this top, this bottom. All right, everybody see it? That top. All right, the preponderance of evidence says that this is going to be the next top. Is there a top up here? Yeah, but I'm going to run into this line first. So that line's important. If I get above here, I'll redo the top. But right now, I'm looking to gun to 092.40. All right, and that's right. They're not a specific thing. They're just be aware. This is the area you better be watching because there's lots of stuff that stopped here. All right, now I go down to the 240 chart. All right, when I'm down to the 240 chart, all right, first of all, I want to make sure we were in a downtrend, so I make sure the old downtrend is gone. This is what we were doing right there, and we're no longer that. We've broken out. All right, so all we care about on a trend is the last piece. What are they doing now? This is what they did last week. This is what they did the week before. All that. This is what they're doing right now, and this is what we got to trade. All right, so our first job is to get the trend on here, and we're going to use this to start with. From here, it's very shallow at this point in time. Why? Because it's just started. So what will happen is that they will have to redo this trend. All right. So now, if you're not used to this, you go, okay, I got a trend on, I'm done. No, you're not. All right. We have 3 points. 1, 2, 3. All right. So we can use this trend to start with. However, it's too shallow. All right. This is an unsustainable trend. So they will probably pull this down and then bounce. Once they do that, the new trend will be this, whatever that is. But they've got to do this that has not happened yet first. All right? Now, we already know that. Why? Because we've gone into the charts. As a trader, you've gone in and you've done at least 300 uptrends, and you've done at least 300 downtrends, and you took a day off in between them. So you did 600. So in order to do your trends takes 4 days of work, folks. 4 days of work, and all you did was trends. And that's just the ante in the game. And the more you do trends, the easier this gets. So when you get up around 3,000, 4,000, 5,000 trends, you actually got it down pretty well. All right? So we know the nature of the market is going to, it needs to come down. It is 45 degrees. So we're going to kind of give you a little bit of a review of what we talked about last night for those of you who joined us in our advanced class. This is what trends look like. In an uptrend, they got to go 8 to 2. In a downtrend, they got to go 10 to 4. Anything other than that is not sustainable. All right. Now, if it's shallower than that, that's not a good thing. If it's too steep, that's not a good thing. Get it to 45 degrees or less than 45 degrees. Actually, it can't be higher than 45 degrees. 10 to 4 is a little less than that. Once they get it to that, they can sustain that move literally forever. And you can watch them up here as they sustain that move. See that? That's a 45-degree angle to the downside. All right, so we got a trend on here. All right, we prove it. No, how do we do that? We anchor to a support, we anchor to a resistance, and we prove that they know the here is correct. There are always 2 parts to a trend, one down here and one up here. There is always a heart line. All right. Those of you who were with us last night, you know that your percentage chance from the bottom to the heart line is 80%. That's a statistical probability. If you break up here to the top, my percentage chance of going back to the heart line is 80%, which is why you've got to know where that is, because you're going to have to move your stop or you're going to give up all the money. Right? That's how that works. All right. So now, next stop is finding fibs, okay? Once you got the trend, you know where the targets are. I got to find targets in this area right up here. This is where I'm going. So what do I need? I need a swing high, swing low up in this area. I got a swing low and a swing high right there, which will give me Fibonacci values up in this area. So I don't have to go very far back, and I use this swing high, swing low. Now you say, well, how did you know that one? You got to do 300 of these up, and you got to do 300 of these down, and you got to take a day off between them to learn how to do it. That takes you 4 days, all right, of work, not trading, work. All right, it has to be all done at one time. And once you do them, you'll understand. All right. So when you put it on, you immediately stop and say, do you know that number? Yep. 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 All right. Do they know this number? Yep. 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 All right. Since I know these numbers, that means I can count on this being a target, this being a target, and this being a target. Because they're telling me, by the way, these are our numbers that we're using. There's no guesswork here. There is no rocket science. The most subjective thing we do is that trend. So I have a target. I don't know if I have the target yet, but I have a target. That's what I've got right now. Next stop is PSRs. Now I got to do them both ways, to the downside and to the upside. Well, we don't have any of the downside because we know this is the bottom down here. So the only one we're going to get is off this last line right here. This is a PSR. PSR is resistance. When you're looking to the downside, you're looking for resistance. All right. Let me pop it up so you can see. Right, on one candle that sticks up, and in the case of twins, the two candles act as one. All right. So looking to the downside, I need to find resistance. All right. So here's resistance that creates a lower low. That's one. All right. This one does not, because it doesn't create another low, but we already got this one here. All right. I'm looking over here. Do we have any of these create lower lows? No, we got to be below here. All right. Do we have any in here where we have two candles to the left and two candles to the right? No, we don't. So we only have one PSR to the downside, and that will act as support. And we already know one thing. That means that more than likely, this will be the area that the currency comes down to and bounces to create the new trend. See, we already know that. Wow, that's amazing. How do you know that? Well, I've been trading 12 years, and I did the work. I spent hours and spent hours and hours in the chart learning how to do this. You will never learn to trade live trading, folks. Get it out of your head. You'll never learn to trade there. You'll learn the education, but you won't learn any experience. All right. Now I got to go find an uptrend in this area. It's going to be very hard to find an uptrend in this area, but we got one. Hallelujah! Look at that. Son of a gun. That's nice. All right. All right, so we can see we're right here on this one to the upside. They've already taken it out. Where's the next one? Right here. Now, this is support. Let me show what that was. It's just the opposite. We're looking for supports, which is to the left, to the right, with one candle sticking down, unless it's a set of twins, which they act as one candle. All right, so that's what that looks like. All right, so what am I looking for? Well, right here, see? One candle sticks down, to the left, to the right, continues the trend. Over here, that doesn't. That one does, creates that higher high, and this one does here, creates that higher high, but now we're above our day chart top, so the only ones we got to get are this one, this one, this one, this one, and this one to the upside. All right? Don't make it difficult. It's not hard. All right, now I have this huge wide open space here. Huge, huge, huge wide open space. So I got to make sure there's none there. So I'm going to go back further and see if I have an uptrend still in here. That's a retracement to the downside. That is not it. All right. So as I go back here, I can see all the way back to the charts. You got to go as far back as you can get them. I'm going all the way back to the beginning on a 240 chart. There's nothing here. So that means there's a wide open space there. All right. So let's see what happens. Did they move the market in that wide open space? Okay. You can see there's a big move right there. Look at this big move right here. See that? Why did they do that? There's a huge wide open space there. You see that? That's why. There's nothing to stop it. This is how you prove to yourself, wow, this is what they do. Oh my gosh, what did they do here? Wide open space. They ran it. What did they do here? The wide open space. They ran it. Can everybody see that what I'm telling you is when they have a wide open space, every time we look in that area, what do they do? There isn't one time in here that we don't see that they ran it. All right? So what do we know? If we get in that area, they're going to run it. And we better be prepared for that area, all right? And it is close to happening, as you can see, all right? Now, there are barriers to getting up to it, one being the trend line at the current level, all right? So we already know that they could go up here, hit this, pull back down to the heart line, 80% to that, and then we make, see that? So the market makers know that. The market makers are in charge of creating the structure. So they know that. That's what they will probably try to do. How do you know that? Go study the market and you'll learn this. It is not about finding some stupid indicator that turns over and says you should buy now. It's not about that. It's about understanding. We don't have anything against indicators. We're using them. What are they? Item. They're information gatherers. These are Hakanashi charts down here. We don't trade them. They feed us information. We trade the price action off the 240 chart. But we got to figure out. Right? So we're now on our first move to the upside. So we have our first wave to the upside, which means we can put the HSI on here at the bottom, the first one, and here we are. Right. Now, we have now identified where the areas are that we can trade. I'll pull back to here. We got this trade, and we got this trade, and then we got this trade. 1, 2, and 3. That's the only trades we got. All right, open it up, Pip. A blank chart. And now look what we know. We know how to trade this thing. See? Before we didn't know how to trade it. Look at the confluence on this chart. Fibonacci's on PSRs. Fibonacci's and HSI's on PSRs. Fibonacci's on PSRs. See? That's it. All right. Well, yeah, it's lots of information. That's why we let you come in for 5 days, because you can't get this, and you can't get it in a day. Get rid of it. You're not going to be able to get it. It takes thousands of hours to learn how to trade. HSI is a historical statistical indicator tool that we invented to find targets. It has the information you're supposed to get. Right? Historical support and resistance, and Fibonacci sequential moves. It has that information built into it, so all we got to do is find a high and a low, and it'll find it. Right? It's your screen, Peter. Well, they're not very big on my screen either. Right? But so that's why they stop here, because that's a known number. Why do they stop here? That's a known number. Why do they stop here? That's a known number. See? When they get up to here, they'll stop here. Why? It's a known number. See that? So that's what happens. So anyway, let's see if I can catch up to some questions here. You'll get that information at the end of this week, Ivan. Just take advantage. Everybody wants to jump in. Go, we're going to get this software. We're going to do it. Don't do that. You're having enough time trying to absorb how to do the methodology, let alone saying, okay, now I want to learn software at the same time. Don't do that. Take it till Friday. That's what we got. Friday, we'll open it up and let everybody see what you can do. All right? No, they don't. See, they're proprietary to us. We can't do them on TradeStation, and we can't do them on that because they don't have the ability to do it. We had to create our own charts. That's why we did it. Right? No, they're just high-lows is all, Raju. The yellow boundary lines are just high-lows. PSRs are nothing more than previous support or resistance. Previous support or resistance are the trader's job to find. There is no tool to do it. That means it's a manual process. All right? The space you will trade is the wide open spaces between them. This is the space we'll trade, nothing to stop it. And you see, what did they do? They ran it right up to it. All right? What stopped it? Right here, the R4. What's next? Right here. If they bounce this morning, we know that that's our trade. If they don't bounce it this morning, we know it's not a trade. All right? If it pulls down to here on a pullback, which it needs to do because of the structure of the market, to a better angle, this is not 8 to 4. I mean, this is not 8 to 2. Right? This is about almost 8.5 to 1 to 2.5. Right? So they need a little steeper move. Right? Well, how do they do that? Well, professional buyers will not buy at the top. Right? Professional buyers don't buy at the top. Professional buyers buy at the bottom. All right? Where's the bottom? Well, it could be all the way back down to here. That's a possibility. Right? It could be right here where we have support. That support could support the move to the upside. So where's our trade? All right? If it gets down here, then we'll have trade 1, 2, 3, and 4. Right? Now, on this chart, there are only 4 places to trade. And unless you're doing that trade, there's nothing to do here. You see that? Nothing to do on this chart. Right? All right. Now we're doing we're guest hosting with Trading Pub SG at this point. That's all you need to know at this point. We're guest hosting for them. Exactly, Lila. Yeah, you can trade all that stuff over there on a stock market. There you go. Thanks, Pip. You know that because they had a trend change, and you take the definition of taking a trend out is you take the trend line out means nothing. When you take the previous resistance out, right there, that's the trend change. Until that happened, this was still potential for a false breakout and go again. Like that was a false breakout right there. See that there right there's a false breakout, and back down they go. See. You always have that danger that it's a false breakout, right? So how do you got to do? You got to put a rule on it. I don't trade it just because it broke a trend line. I break it because it broke the trend line and took the resistance out in this case, right? And even that doesn't mean you're going to be right, because look at that happen here. They broke the trend line, broke the resistance, went up, and immediately reacted to the downside, and down they went. See? So you still have danger here, but you got to have rules. It's not like, I think it's going up. I think they broke the trend line. I think it's going to go up now. That thinker is what gets you in trouble. You never think. You get the chart to tell you exactly what it's going to do, but your job is to make the chart work. When they stop, because they got to get structure back in place, John. JP, they have to get structure into play. Fundamentals are part of the deal. There are 56 fundamentals a month on average, 56 of them. And you can look at any chart. There's an average of 2 a day. Right? You can look at any chart, and you'll see that there are plenty of fundamentals in there, but it doesn't change the technicals. See that? That's it. I enter trades on MT4. See? When you'll get that info, it's trading pub right now. For now, it's trading pub. Right? ATR is the average trading range. Right? It is a very powerful number. It measures the volatility of the market. Right? It tells you whether if you have questions like that, John, that's what Google's for. What is ATR? You'll get a huge 43,000 responses. That's what Google's for. Right? Average true range. Right? Okay, Dino. All right, what's the stop? I went through it now. I've done it 3 times what the stop is. The stop is the last support or resistance plus 5 to 7 pips on an odd number that ends in a 3 or a 7. Okay? So if we were going to take a trade here to there, all right, my last support is right here. I've got to go 5 to 7 pips below that and find an odd number. There it is, 88.74. So my stop would be 88.73. Has to end on a 3 or a 7 right there. That's my stop. I take the trade here. That's my risk. And now I can figure out my reward. If the risk, I cannot. If you were in the room yesterday, you saw we had 4 or 5 trades that we absolutely identified where they were going to go, but we could not make the trade because the risk and reward was bad. All right? So that's it. So how do you get stopped? How do you avoid it? You stop it correctly, and it rarely gets stopped out. All right? You will still get stopped out, but you'll rarely get stopped out. All right? What happens to traders is they put trades on where they have no room to go, and where the stop is real big, and because there's no room to go, the bankers won't make the trade. And so they have to come back down to find enough buyers to make the trade to the upside, which stops the trader out down here because why? They looked at a trade, they didn't evaluate the risk and reward. The reward was too small for the risk, but the bankers therefore cannot make the trade. So what are they going to do? They're going to come to the downside so they can get in position for that move. That's how they do it. That's called understanding how the market moves. If you don't understand that, you got lots of work to do, folks. You should not be pushing the button until you know that stuff. Do not pull the trigger until you understand how the market works. Yeah, but I want to go make money and I want to pull the trigger. I want to push the button.
Did you tell me to push the button? No, I didn't tell me to push the button. I didn't tell me to push the button. You shouldn't just go push the button. You don't go around pushing string button. I tell you, don't push the button.
Retail traders want to push the button. The longer you trade, the less you push the button. All right? We don't tell them they're proprietary to us, Raju. They're one of the reasons we're successful. Bankers don't trade and say, I'm going to trade here. Let's all turn here. They trade on a number. They trade because they all know the number. They all know this is a 618 fib. This is a 50% fib. This is a 382 fib. This is a 786 fib. This is a previous support or resistance. They know that stuff because they're professional traders. When it comes to retail traders, they don't know any of that stuff. They're trading a moving average crossover, man. That's what they do. I mean, listen, I'm talking to you because I did it. I learned to trade a moving average crossover. I learned to scalp. I learned 50 trades in a row with 5 pips to be what I was at the company I worked for. 50 trades in a row for 5 pips. And one day I did 78. One time I did 78 5-pip trades in a row. And I looked at the money I had made, and it was nothing. And I said, that's probably the best run I'm ever going to have in my life. What are my odds of ever having 78 trades in a row again? Slim. And I didn't make any money. That's when I knew I couldn't trade for 5 pips anymore. So I had to go learn how to trade the targets. So that's it. All right, so catching up on questions. I got that one done. Okay, I got that one, I think, from Dino. How do you trade non-farm? We sit on the sideline. We trade it the same way we do every fundamental announcement. We wait for the reaction. We wait for it to go sideways, 3 to 5 pips. Okay, and we only trade in the direction of the trend. If the trend is up, then we will only take the direction of the trend. Goes sideways 3 to 5 pips. We go above that with an entry order, above any resistance here, where we have a wide open space, and we place an entry order here. Takes 3 to 5 minutes. All right, but we got to get flat. All right. Once it's flat and we know that area and it does that, then we get it. You saw people doing it today on the pound Aussie. We had it set up, ready to go. We knew where to go. That's how we did it. Entry orders, and then you start loading them up. All right. Now, the smartest thing to do is to not trade non-farm payroll, is to walk away from it and close your charts down and do something else. This week we're going to be open. We won't trade non-farm payroll. We'll open afterwards as normal on this Friday. Normally we don't open on Friday, by the way. We don't trade on Friday because Friday is a bad day to trade. It's square up day for the market, and square up day is a bad day to trade. All right. Well, Larry, on the Aussie dollar, they broke the trend. That's the problem. They broke the trend. It's no longer a downtrend. All right. You had a fundamental change in the market. The Royal Bank of Australia, said we are no longer going to do tapering, which is a fundamental change in the market, which means that the currency is no longer going down. See, that's a fundamental change. That's why they're called fundamentals. So, don't know what you're saying, Paolo, because we're showing. Right? You define a trigger by that setup. Do you know what you saw in the beginning? The RF 1010 trade setup. I showed it to you. There was when you first came in the movement, and we did a little video. It showed you exactly how that worked. All right. So what are we looking for? We're looking for harmony. All right. We're looking for this to turn green and green. All right. After a blackjack to the upside, then we're looking for a arrow and a painted candle to the upside during the session. All right. We got to have confirmation. Everything we do is a training method. You're just getting a little slice of what it is. You're in a live room that we do every day. All right, that's what you're doing. The difference is that most of our traders aren't asking questions like this because they've been here a while. There are 500 traders in a room every day, and they don't ask these kind of questions because they've already learned it. Now, you all are new, so what's happening is that you're asking questions. There's nothing wrong with that. I'm not telling you that. But, you know, once you get in and the work is done with you in the past. All right? You learn how to do it. We teach you how to do it. If you were there last night, you learned how to do trends. All right? So correctly, you learn how to do trends. Not the way most people learn them. You learn how to do trends correctly. All right? So you have to learn to do it correctly. Most people do not learn it correctly. Where do they get their information? They got their information from an ebook, from a forum. They're over in Forex Factory trying to do that. You know, you have to learn from somebody who's successful and has been doing this a while. All right? So the light blue lines are the line. You saw me put them on. All right, Victor, that's a crazy question. I put these lines on 5 minutes ago, and you're asking what they are? That doesn't make any sense, Victor. Sorry. All right. That's right, Rich. It's down. They're working on it. All right. So there's no reason to ask that question yet, Will. We won't even do it until Friday. So there. All right, let me think here. How do you remove the grid? Why would you want to remove the grid? The grid is based on the pivot point. This is based on the pivot point, Alan. Do you care about the pivot point? I don't really care about it, but bankers do. And because bankers care about it, we care about it. Right? That's the pivot point, the grid base right here. That builds 30 pip movements off of that number. When the market moves, it moves to that number, moves up to the next one, right here, moves up to the next one. You see, they know where that is. That's the grid. They knew where that was, they knew where that was, they knew where that was. Right? Now, if you know where that is and you go, okay, I'm going to make a trade right here into the grid, that's not a good trade, see? The dots on the gatekeeper chart, these right here, those are pulses of money into the market. That's what they are, pulses of money into the market. To our knowledge, we're the only people who have figured out how to find momentum entering the market. And maybe other people have done it, but we're able to figure it out. All right, thanks. You keep it till it's no longer in effect, Yogesh. Sometimes they stay on there for 2 weeks. All right. When you get a trend change, just like we did in the Aussie, you take everything off and redo them. When you get a trend change, other than that, you work the trend until it's no longer there. All right. How long do you hold trades? As long as they're profitable. You heard people this morning. They were saying, "I'm in the Aussie dollar and still in." All right. So how long are they trading? They've been trading all night. And they're still in. Why? Because this currency is not going to the downside. It's going to the upside. They know where the target is up here, and so they're staying in the trade to the target. All right. So this may end up being tonight and maybe tomorrow before they get out of the trade. It's whatever the market will give us in a wide open space. We're not concerned whether we get out of a trade in 3 or 4 hours. We're concerned if we can maximize the opportunity. It's a business decision. That's what it is. It's a business decision. All right? There's no difference in the business that you are in, whatever that happens to be. All right? Well, I'm only going to make calls to my customers for 3 days a year because I
That ain't working, that's the way you do it. Money for nothing and your chicks for free. Money for nothing, chicks for free.
I lost internet for a minute there, folks. So there we go, back. Lost the internet for a minute. All right, so that's our trade, a bear flag. Here's what remember I just told you? Here's what happens. If they can't find enough sellers here, they're going to have to go up. All right? They didn't have enough sellers to continue this move. So what are they doing? They're going up. They're building a bear flag. So if you're a trader who bought right here or sold right here, you're now living through the retracement. All right? Now, for us, the retracement is our friend because we won't sell at the bottom here. We'll wait for the bear flag, which is the retracement to the upside, and we'll sell it up here to the downside. All right? That's what we'll do. See? But the average retail trader doesn't know that 618 is there. They don't know where this target is. So when it takes off with a big red candle, they go, oh yeah, I'm in, baby. I'm all in right there. And now they got to live with a 20, 25, 30, 35 pip retracement. All right? On this one trade right here, if you had traded it with 30 pip stops, you can see you went from 99.16. The top of this candle is 99.83. So just shy of 60 pips. All right? 30 pip stop, you got whacked. 30 pip stop, you lost your money. Why? Because you sold at the wrong spot. You sold here instead of selling here. Here, your stop is here, risk is, the reward is here, the reward is here. There's my risk, there's my reward number 1, reward number 2. I can make that trade all day because I have figured out the risk and reward. I make a trade not because I have a trade set up, not because of any of that. I make a trade because I can assess the risk and reward. Now, the only way you can assess the reward is to find where the targets are. It is not possible for you to do correct risk and reward ratios if you don't know where the reward is. See, not possible. It is not possible for you to do that. Yeah, I lost it too, Tim. So, all right. So all of you who aren't trading to a known reward, you are not trading. You are gambling. You are gambling. All right, we're at the 11 o'clock bump. Okay. All right, now we've got to be very careful here because we should have a move here, but if we don't get a move here, in 30 minutes, London closes. In 30 minutes, London closes, which means that 2/3 of the world's traders walk away from the charts, which means you no longer have enough traders to push a pound currency, a euro currency, a Swiss currency, or a dollar currency. However, the next market is the Aussie market, or the Australian, or the Singapore, the Sydney, right? That means that the Aussies and New Zealand market could continue because they have their upcoming market is coming up. So the trades we will look at, if we don't get anything here in the next 10, 12 minutes, will only be trades with Aussie and New Zealand's in it because we can trade them all day. We cannot trade a British pound all day. We cannot trade a Swiss franc all day. We cannot trade a euro all day. We cannot trade a dollar currency all day. All right? But we can trade New Zealand and Aussies, all right, all day long. So this is the pound New Zealand. We're waiting to see if we get it. If we get it, we'll take it. All right? This is a New Zealand yen, all right? So if it makes a turn here, which is not showing any sign of doing, all right? Right now, it's still climbing up the hill. We're working a channel to the top, as you can see. Let's draw the line on it right there. All right. We will not be a seller on this currency till we're down here. Right here. These are bounce points. Bounce points. Right here. Break, hook, and go here. That's our trade. If that were to happen. All right. So breakthrough is not an RF1010. Breakthrough is a trade setup. It's a reason. It's a momentum reason to take the trade. All right, we got to figure out whether the currency is worth trading before we ever trade that. Breakthrough is a break, hook, and go, like that. There's a breakthrough, right? Here's a breakthrough: break, hook, and go, right there to the downside. See those? That's it. Bull flag, break, hook, and go. See? That's what they are. That's breaks, right? So if we come down through here and we do a break, hook, and go to the downside, that's breakthrough. You got to take the line out and you got to take the support out, and then you're free to go down in here. Now you're looking for an RF1010 after that. Do I have enough momentum to drive it to the currency? That's all you're looking for is momentum. Can I have harmony and momentum that says you can get to the target? Because if I don't have it, now I have more risk. So I'm trying to reduce the risk to the lowest amount I possibly can. All right. Let's see, Kevin. Once you have identified a possible setup on a number of pairs, you set an alert. Yes, you can do that. And how and where do you do that? All right. So if we wanted to know right here when this currency hit equal this line or was above or below this line, we just right-click and we say set alert to line. It says, okay, do you want to know above the price, above or equal the price, below the price, or equal to and below the price? I want to know if I'm above the price. All right. So I click that, say notify, and play a sound. I don't want it to send me an email. I just wanted to notify me, and I go, okay. Now you see there's a little alert right down here. If it gets above that number, it will pop a little thing up on top of me and say, here's your alert. You've done it. And now you can go to the currency and do it. Okay, Kevin. Hopefully it answered you. When pulse arrows appear, this indicates momentum, and you would consider entering. Assuming that's correct. That's when you consider entering. You don't. We don't make a trade because we have a RF1010, Rich. Very important. We don't make a trade because we have a trade setup. We trade a trade setup because it's proving what we already know. You see that? That's the difference, right? People say, how many of these trade setups do you get a month on a currencies? And we get 3,000 to 4,000, right? How many are tradable? 200, maybe 200. There are tons of trade setups. Right? Trade setups are not trades. Trade setups are only taken when they're proving what you already know. Now, that's what happens to retail traders is they approach the market. Where is the trade setup? And so when it does it, they're done. Hold on just a second. Okay, back to you. Sorry, I had a call come in. Well, that's what I'm talking about, Marai, is how do we enter a trade, all right? So let's go over here to this pound New Zealand, which is the one we're waiting for next, okay? This is the one that's imminent. Will it happen? I don't know, all right? So we have to determine what will make this trade, what will make us trade this. So we go and we see, okay, we have a bear flag, all right? There's a bear flag, all right? Now, I'm just going to draw a line on it. All right, there's a bear flag. All right, so the bear flag is a selling sign. We have had a breakout here. We have come down here. We've taken the support out. We've broken, hooked back to it. We've already done the break and the hook. What are we looking for? A break of this bear flag. If it breaks here, we know what the trade is. We can already see it. Here's my risk. Here's my first reward and my second reward. All right, so I know I can make the trade. All right, so when it breaks and it hooks, and I'm now right here is where I'm looking for bright red candles like that, with momentum coming in to push it to the downside. Because if I don't have that, I will not have enough sellers to make it to here, which means they're going to have to adjust this bear flag and go even higher. Because professional sellers will not sell at the bottom. Professional sellers will sell at the top. So I have to make sure that just breaking out and hooking and getting ready to go is not a trade. All right? Now, having a trade setup that's bright red and not breaking out does not mean I have a trade setup either. When both of those come together, break, hook, and a go, and I have my trade set up to the downside, then I make the decision on with one caveat. The risk and reward has to make sense. It has to be minimum 1-to-1, and we don't like that. We like 1-to-2, 1-to-3. All right. Now, this is from here down to here is easily 1, 2, 3, almost 1-to-4. So that trade right there makes absolute perfect sense. The first trade makes total sense because there's the risk, there's the reward. It's bigger. That's greater than 1-to-1. We would take that trade once we got our trade setup. All right? And when you learn to trade, you don't even use the trade setup. You enter because of price action. Because the currency just proved what you did. what you wanted it to do. So later on, as you become experienced and advanced, you enter the trade based on price action. If you get a trade set up after that, then you double your position. See, that's how you do that. That's why you're seeing traders in here who will pop in and say, I made 94 and 86, and then 60 and 40 as they press their winner. Why would they make a trade of 94 and then 86? Because the 94 was the break, 86 was they got their trade set up, and they doubled their position right there. See? All right, that's how that works. All right, we can open it up, I guess. This is much more manageable today, Pip. Without 300 questions coming in, it's much, much better. So, I don't know where she at. Pip, you there? She's in the middle of selling her house. Okay, there she is. Okay. So, all right. Thomas, I'm not. I came late. The slope of a trend line is no, it's not 45 degrees. It's less than 45 degrees, Thomas. Less than. Yes, that's why you came in late, and that's why when you got a trend on here, you have to auto scale. See, you right click and you auto scale, and that gives you the right thing. Right? You just can't do it because if you change it, you're gonna get a totally different angle. So you got to use the auto scale to know whether you're right. Exactly correct. You can use any broker, no matter that's which broker you use. No, I have no clue about Ninja Trader, Julius. Nothing. CJ, it looks like divergence. Okay, let's just go check divergence first. CJD, JPY. Now, what you don't know, you don't have divergence. The job of the MACD is to follow the candles. All right, what is it doing? You have convergence to the upside. All right, it takes two humps to develop divergence. Okay, all right. So let me show you what divergence looks, and you'll see that doesn't look anything like it. All right, so here's divergence right here. All right. The job of the MACD is to follow the candles. MACD is trembling up. Candles are trending down. That's divergence. We're going that way. The MACD wins every time, so we're going to go up. Right? That's divergence. Boom, there it is. You see the move up to the upside. Right? So when we look at it over here, what do we got? The MACD's job is to follow the candles. It's following the candles. It's not diverging, it's converging. Right? So we're good. And we still don't stop trading in the same direction. That we just move our stop more judiciously. That's all we do when we have that. So change this back. USD, JPY. All right. So let's see. Eventually, yeah. Well, we try to remind you that that if you keep going back to the old ways, Josh, then you've asked to join the dumb money. I'm not calling you the dumb money. I don't call you the dumb money. The bankers call us the dumb money. They call me the dumb money. All right. So my job is to keep myself from being that. All right. So that's my job. All right. And that's why we do things like we'll play this all the time. Wide open spaces. Why? We're going to try to drive it into your brain. What's wrong with the audio player? Hold on. Let me load it up again. Yeah, somehow when I lost that connection, I lost the audio part. So, yeah, okay, we'll open up. Aussie Cat. Oh, okay. Well, now that's a whole different ball. Okay. All right, I don't trade the Aussie CAD, so. So what are we looking at here? All right. We don't have enough information over here yet, Tom. All right. We need divergence for us in an intraday comes off a 60-minute chart. We're going to need 2 humps. We only have 1. If we get 2 that go like this, and then this continues to move upside, then we have divergence. We don't have enough information here. Right now, it's following the candles like this, and it's doing a good job. This is where we had divergence here for the upside. You can see that. And we now are in convergence to the upside. We will not get divergence to the downside till we get that hump in place. We can't find it yet. So that's it. So but we don't trade the Aussie CAD. So you ever try to attract many? Could you do an analysis of the E-mini on the S&P? Yeah, let's see here. All right, so S&P obviously we're in a downtrend right here. You can see too steep a trend. All right, but they are respecting the heart line. So right now it is what it is. All right, see that? It is what it is. All right. So can you hear me? I did it. All right. All right. Can you see it now? Yep. Okay. Can you hear me? Okay, everybody. There we go. Okay. Internet. It's not a perfect business. All right. All right. So what I do is I went to the S&P. Somebody has to do the S&P, and we're in a downtrend, as you can see. Way too steep a trend. That's 11 to 5, so it's too steep. Okay. So I have 10 megs of RAM and a video card over here, and 60 megabytes of download speed. So yeah. Oh, it might be them. Yeah, I can't help that. I got you. Thank you, Room. All right. Let's see if you go with me. Let me go to a 60-minute chart here. There you go. Yep. Look, it did it. Okay. All right, so what I did was I got a trend. Now we need to know where the targets are down here. So we went and found a swing low, swing high in that area right here. There's the 382, the 50, the 618. All right, that's it. We have no PSRs over here because we're up in the stratosphere. All right, we haven't been here for, remember, 2007. So we don't have that information here. We could go up here to a day chart and see if you could find something here, but you can see it's all that big move up there. And we go back here and we'll see if we can get to anything. We can't. Let's go to a week chart. And that's our current. And no, we can't even get here on the S&P. All right. So you can see this is a correction in the weekly thing. It's just nothing more than a correction. So we still got moved to the top probably. So, and you can't do much more than that on this one here on the S&P right now. So we can't find support or resistance previously, and if I use the HSI on this last move, it's just going to be small because it's too big a range, as you can see. But you can see it know where that is. Went through here, so it's just too big a range for the HSI to work. The HSI was built for Forex. That's it. So. Okay, thank you, John Robert. Pound New Zealand break and a hook right now. There we go. All right, so now all that we've been talking about this morning now comes to play. All right? We have a break, which we needed to have. We have a hook. All right? We already know now that if we get a sell, we know where our first trade is. We've already planned this trade. There's no doubt about where this is going. Right? We've talked about this multiple times. What do I need? I have taken out this side right here. What do I need? I need to have sellers come in and prove they're going to the downside. Right? So I can do that by watching this candle right here. Another way, if I want to just kind of keep track of it and catch it even quicker, is to go down to a 3-minute chart and catch it there. So, all right. So let's see. So hi, Julius. There you go. No, when it comes in, you're going to see it's going to turn here. When momentum comes in, see what that's what it looks like. Bright red candles right here. See, that's not a bright red candle. That's a light red candle and a green page up here. But if it turns to a bright red with an arrow on top of it showing us money coming in, then we're interested. All right, that's how we do it. All right. Okay, we'll do. Let's see, technical support. Yes, technical sports on here for a minute. So yes, I am. We're having freezing and that kind of thing happening, and some garbled sound. So, and right now I can't. I'm typing into that. That's 3 times I've typed in it. You just got it. I typed that a minute ago when you first came in. So you see the delay I have on the chat is right there. So. I'm talking to technical support to all of you traders who are there. We're waiting for the arrow and painted candle to the downside. So we've got a signal that they're going to try to make the move, but that doesn't mean they're going to make the move. So let's wait and see. All right, so no, we use MT4 to trade. We just don't use the charts. The charts are worthless on MT4, absolutely worthless. So I think I got all those questions answered. All right, David, trading in the Bible is the Bible you need to recover to cover. There you go, David. That's a good analogy, David. We use FXDD. We like FXDD, but any reputable broker is fine. All right. Yeah, of course, it's running an algorithm behind the fact. Exactly right, William. Running an algorithm. It shows you when momentum's coming in. And you can just go back in the past and watch it. Money, arrow and painted candle, a white dot, boom, money coming in. 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 See that? All right. Money coming in. What are we waiting for? Money coming in. All right. We have money coming in. Now, they may just be doing nothing more than adjusting the flag. Everybody see that? That's why you got to wait. Oh, we actually got money coming into the upside. Look at it. Everybody see that? Money coming into the upside. Green candle to the upside as they're pushing it up higher. Now, why would they do that? Because they ran out of sellers here. And they don't think they have enough sellers to make it to the target. So they're going to go, the market makers are driving it back up. They may come as high as here because it's a bear flag. Right here. Now, those traders, here's where you get lost as a retail trader. A retail trader says, oh man, it's going, and they take this trade right here, and then it goes and fulfills the bear flag here because they weren't willing to wait for the break hook and go to the downside, and it goes all the way up. There we go. All right, I'm showing now. Everybody see it? All right, see my chart? Let me switch to a different chart and see if you can see the movement. All There you go, Sam. All right. Cool. All right. Now, so this is a great example of why you need to wait for the break, hook, and go. Here we are with a bear flag. We have a break and a hook and a no-go. You see that? A no-go. All right? Wow. You got to wait. Wait for your trade to come to you. There's no trade here. We're interested because of that right there. But what they may actually be doing is creating a bigger flag, all right, like this now, because they don't have enough sellers. So what we do, we adjust, we adapt. All right? Get to the downside, couldn't break the bottom, so they came up, see if they can get some more sellers in. Understand what the market's trying to do. It's trying to entice sellers into the market. You see that? We're trying to entice sellers into the market. Why? Because professional sellers will not sell at the bottom. There is support right there. They will not sell at the bottom of support. They will sell to support and a break of support, but they won't sell at support. They will only sell at the top. All right? So if you know that, you go, okay, I'm going to trade with them. Because if I don't do that and just trade, guess who you're trading with? You guessed it, the dumb money. All right? So, and I didn't call you the dumb money. I'm just telling you, you just decided to do that. See? Pip sent me an email. Can you take a look when you get a chance? Oh, Pip, you sent Pip an email. Okay, I got you. All right, we're at the 11:30 bump now, and that means that London has just closed. All right, so now we have no currencies that are pound related. We have no currencies that are New Zealand related. I mean, that are euro based related or Swissy based. All right, but we can trade the Aussies or the New Zealands. All right, so New Zealand has to make a turn. It's not made a turn, so there's nothing there. Okay, Aussie. All right, we need it to correct. All right, now this is what we call a pole, folks. So I want you to understand what the pole is and what it does. A pole is a sideways movement right here. All right, and what are they telling you? There are no sellers below here. There are no sellers here. All right, that means there can only be buyers. All right, now whatever the market did getting into this movement right here, this is why it's called a pole. Looks like a flagpole. All right, whatever it did getting into this movement, that's what it's going to do coming out. So we can see that this target up here at 9,000 is a realistic target based on the pole. All right, it will do this over 78% of the time. That's better than you can trade. So up we're going to go. And so we're looking at how far that is. So all we have to do is measure this from here to where it goes in. So I'm going to measure it here. There's the top of this sideways move. There's the bottom of this sideways move right there. All right. And we got in starting in this candle right here, which is 87.74. This is 88.75. So there's 99 pips to the top, to the target. So I'm going to put this on, and that's a target that we will add to the situation today. 99 pips. We're a buyer, and we're looking for where that is. Come on, what did we do? Oh, I hit it wrong. I don't know why I've been doing that lately. I've been hitting cancel instead of OK. $99 pips is 99.16. All right. So now we know that if we get the break to the upside, and you can see she's trying to do it right now, we're looking for that trade and then this trade right here. New Zealand yen. See, I just got an alert. Let me see if you show that up there. All right, there you go. I'm running way behind. Sorry. Hold on. Still having trouble here. Don't ask me why. Can you all see the alert, or are you still looking at the PAP projector tip? Frozen again. I don't know what's going on, folks. So I'm sorry. We just got our New Zealand yen trade. You see there now, it just showed up. We just got the New Zealand yen alert that we were looking for. So I don't know what to tell you other than probably we need to close it down